Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about tomorrow's Bank of England meeting. They're under a lot of pressure to cut rates, but that doesn't mean they're necessarily going to cave to that pressure. What's the likelihood of rates dropping tomorrow? So I'm going to talk about that. I'm going to talk about what inflation fears we've got still on the horizon, and lots more besides. So before we jump into this content, as always, if you haven't done already, do subscribe to the channel over there and hit the bell notification. It really helps the channel grow. We're very close to 23,000 subscribers now. So you're an all-round great person if you do that. And smash the like button, tickle the like button. Do something to that like button over there right now. That really helps with the YouTube algorithm. We're trying to get 5 million views this year. We're just over halfway already on that. So I appreciate everyone that smashes that like button. So, the Bank of England, they've got their meeting tomorrow. And the markets have a 50% chance that a rate cut could happen. It's actually improved slightly in the last few hours and days. It was an outright no, according to the markets, for a while, but things have changed. Now, there's a lot of pressure from the media, the fact that we should be cutting interest rates. And I'd like to get a varied opinion on this, but I actually agree with this at this point in time. I think that we've held the interest rate for a very long period of time. We went up 14 consecutive times in a row. We held for 4 or 5 times now. And I think that because inflation is such a lagging indicator, inflation is already on its way down. The next data is out in a week or so, and you'll see we're very close to that 2% mark now. Now, one of the things that is in the inflation data is not housing, not as in the cost of your house or the mortgage, but rent is. And rent has been driven up significantly, in my opinion, due to interest rate rises. You see, I speak to hundreds of landlords all around the UK who've been hit really hard by the fact that their mortgage costs doubled or tripled, or sometimes 4 times the price that they were paying before. Those costs got passed on through rent increases. That is in the inflation figure. And so if you want to have a little bit less pressure on rental increases, then now's the time to start cutting rates. You see, why would we cut rates in a month or 2 months or 3 months from now? Because the impact from that rate cut takes a while to feed into the market anyway. You're not going to cut rates this week and then next week house prices go on absolute tear. Everyone starts getting a mortgage. Everyone's house purchase gets completed. That isn't what's going to happen. It takes time for people to decide or to feel the benefit of that rate cut. So what are the markets saying? Well, the markets have got a belief that we will have 2 cuts this year still. 2 cuts this year. And that will take us from 5.25%, which we're at the moment, to 4.75%, which is a great start. Now, that will make a big difference, and it will make a difference to buy-to-let investors because we pay interest only, and that means that landlords are less likely to increase rents going forward. So that would help inflation. Now, here's the bigger problem with this. There's more belief now that the Bank of England will cut before the Federal Reserve. In fact, the Bank of England have said so themselves. But what's the problem with that? Well, the problem is if the Bank of England cut their interest rate, then the Americans look like a better place to put investment and currencies and all that kind of stuff. And so the pound is likely to lose value to the dollar. Now, the problem lies with that is that we import a lot of stuff in this country. Then it's going to cost us more pounds to buy that stuff, which causes more inflation, which is a real chicken and egg problem. Like, what do you do first? Do you cut the rates, or do you wait for the Americans that have said it's not going to happen as quickly as expected? You see, over in America, their inflation is slightly lower than us, but it's sticking. It hasn't moved for months on end. And that's been the problem that they've got over there. Whereas in the UK, while our inflation has been higher, it's moving in the right direction. Eventually, we know it's going to get very close in April's data to, which we're going to get this month. So April's data that we get in May, we're going to be very close to that 2% already, right? And even that's lagging data, right? That's April's data, right? And we're going to be so close because the energy prices have dropped. The energy costs that you pay have dropped. That is causing things to go down. Now, one thing that the Bank of England is keeping an eye on and they're looking at is the service sector, particularly restaurants and food places, because they are really struggling with inflation still. They're struggling with wage inflation. A lot of people want to get paid more money, which is fair enough and reasonable considering their costs have gone up themselves. But that means that the restaurants are having to pass those costs on to people. That means that that side of inflation that is included in the data is still going to be relatively high. And so the Bank of England's keeping an eye on that and what can they do to tame that and bring those prices down. That's very important as well. So what do I think is going to happen tomorrow? Well, I think that ultimately, even with lots of pressure, even with the fact that it needs to start happening now, I believe rates should go down this month. That's what I believe, because all of this inflation data is so old by the time we get it. We're probably close to that 2% target anyway, in my opinion now. We're not really doing much to help ourselves by pushing up rents and costs of stuff, and we're hitting businesses very hard. But I don't think that they're going to cut rates tomorrow. I think that tomorrow will be another pause. And I think that April's data, if it is 2 point something on the inflation data, if it's 2.5 or something like that, I think that's going to put massive pressure, like even more pressure than they're getting now. And I think they're going to get other pressure from the government, the Conservatives that are fighting for their lives to stay in power. I think that you'll see a rate cut on June 20th, I think, is the next meeting. So I believe that you will not see a rate cut tomorrow, but you will see a rate cut in June. Now, what are the lenders doing? Lenders have been raising their mortgage rates over the last few weeks, but because the markets are now starting to price in again rate cuts with the Bank of England, even if it's not May, more likely June, lenders are starting to drop rates again. Barclays have this week dropped their mortgage rate. Other lenders might do the same. I'll obviously update you as and when that happens. But if they feel that rates are going to drop, the swap rate will go down. That means they can borrow money at a cheaper cost, and that will get passed on to you if they're looking for more business. If they want to be more competitive in the market, it will allow them to do that. They'll go out and they'll get more business from the people like me and you. Anyway, that's my opinion. What do you think is going to happen tomorrow? Do you think they're going to cut rates tomorrow or in June? Comment below. Do smash the like button. Do subscribe if you didn't already. Go and check out some more content on my channel, including this video right here.